Kevin, thanks for coming in tonight, and let's see if we can't figure out how this is going to work. So, I read an article on Zero Hedge, and in the article, it mentioned that a Kamala Harris presidency could drive the gold price to $10,000 an ounce. That may have been a bit of hyperbole, but from what you're seeing, how would Kamala getting elected affect gold pricing?
Well, I think it's going to be a huge positive for the gold price because everything that you brought up is inflationary. So if you think about subsidizing, purchasing homes for $25,000, really all you're going to do is drive the home prices up an extra $25,000 inflation. She doesn't understand the definition of inflation. Definition of inflation is too much money chasing too few goods. So if you're trying to contain inflation, you definitely don't want to start printing up even more money. So that incredibly stupid idea. You brought up the unrealized capital gains tax. Okay, so if that is going to work, let me give you the exact opposite, which is if I have an unrealized loss, does the IRS pay me? Probably not. So that's just incredibly stupid. You make an investment in the United States with a company and hope that you can hold it for 3 to 5 years, let it get its legs up and going. But the minute you have $1 of profit, they're going to start taxing it because that's where it would go, right? It's going to be for X amount of millionaires and it's just going to trickle right on down just like it always does. Another incredibly stupid idea. The price controls at the groceries has to be the absolute dumbest idea I've ever heard in my entire life, because if she asked one economist that wasn't biased, he would tell you right away. That's the first thing we learn in economics. You cannot control prices. We tried it in the 70s. It absolutely did not work. The minute they raised the price controls, inflation skyrocketed up another 6 or 7%. All around the world, it's never worked. And then who does she want to go after for the price controls? It's grocery stores and grocers. They have the smallest margins of anybody in any industry. It's 1.5–2% margins for the grocery industry. So you're not going to control prices there. Go ask a farmer how much money they make. Their margins are fairly small. So if you want to start somewhere, do not start with groceries because you're just going to make the food supply less and less because they just won't be able to make a profit and continue to supply our tables with food. So
let me stop you for a second. I'm going to bring you back because you're talking really high level economy stuff here. Explain what margin is. So I'm a grocery store and you said they have really low margins. What exactly does that mean?
Yeah, so a margin is your profit margin is what I should have said. So if you purchase something at $9 and you sell it at $10, your margin's basically around 10%, right? They survive on 2% margins. On average, grocery stores survive on 2–2.5% margin. Very small. Any little mistake could put grocery stores out of business. It's a high volume, very low profit margin business. So if you implement price controls and they can't go up with the cost of their goods, if the farmers are charging them a little bit more money because they have to charge money to stay in business, and the grocery stores can't charge anything more, at some point they go out of business because their profit margin is too small. If it was 20%, okay, fine. We can move it up a little bit and control the prices, but you can't do that on a grocery store with very small profit margins.
And on the other side of the coin, she should already know that because she's seeing so many businesses leave the inner cities because that same profit margin, they can't stay in business because of the theft. So if they're losing money because people are stealing their goods, and you on the other side are going to tax them at the same time, there's no way these people can stay in business and make any profit. So it's absolutely nuts that she's trying that. So let me ask you this. A lot of people think currency markets are hard to understand. Even I have a problem understanding them as well. What happens if the United States dollar is no longer the global reserve currency? And if you could explain what global reserve currency is.
Okay, so let's start with the global reserve currency. So the global reserve currency means that countries around the world need your currency to purchase things like oil and commodities and big ticket items. So at this particular point, we have the oil agreements with the OPEC countries that anybody who purchases oil needs to purchase it with the US dollar. So if you start back in the 1450s or so, we've had six world reserve currencies, six different countries that had the world reserve currency status. I'll try to remember them. They're Portugal, Spain, the Netherlands, France, Great Britain, and the United States. Okay, that's six, right? Yes. So each one of those countries, Barry, had that world reserve currency status on average 100 years. The US has been around right now with the world's reserve currency status about 107 years. So it's very powerful because if everyone has to use my currency to purchase commodities, then my currency is in demand more than all the rest of them. So I know that I'm going to have a strong currency. So if you look at the money supply, actual US currency, there is more US currency outside the United States than inside the United States because all countries have to have US dollars in their central banks or in their economy to go purchase these commodities. So think of it this way. We've got this pile of money outside the United States, and we've got a pile of money inside the United States, and that pile of money outside the United States kind of stays outside the United States. So if my definition of inflation is too much money chasing too few goods, and we lose the world's reserve currency status, and all of that money that these countries needed to purchase these commodities is no longer needed, where does that money go? It all comes back to the United States, and that increases our money supply here in the United States dramatically, and inflation goes absolutely through the roof. So is it provable that that happens? Yes. Go read the history book. Portugal, Spain, the Netherlands, France, and Great Britain had inflation when they lost the world's reserve currency status, and it just skyrocketed. There's nothing you can really do about it because you can't absorb that much money in a short period of time, so prices go absolutely through the roof. That's probably the scariest reason that you don't want to lose that world's reserve currency status. The other one is you can't run up those deficits. There's so much demand for US dollars that I can go issue money and somebody's going to grab it. Somebody's going to take it from outside the United States. They're going to borrow it and put it in a treasury because that's how you hold that currency. If I don't have that world's reserve status, we can't run the deficits that we've run. And we may have to pay back some of it because we can't run it. Then you got to pay back.
Might have to pay back. I mean, there's some people saying that we may end up. I mean, I see Elon Musk saying it all the time. We're headed for bankruptcy, and if he's right, then it stands to reason why you would need to have some gold because the dollar is going to be basically worthless. Is that what he's saying too?
Well, basically, what he's saying, he says the world's waking up to the fact that governments can print endless paper money, but you cannot print gold.
Right.
So, real estate, gold, things that have, value and are limited, if you put an increased demand on that fixed supply, what happens to price? And that's why we're seeing central banks around the world, they're selling off US dollars and purchasing gold. The gold price is now at record highs, and if I had to guess, would go much higher. You asked me a question, is it going to go to 10,000? In my personal opinion, no. And if it does, we've got a lot bigger problems. There's going to be no gold for anybody because everybody's going to want it. But I would say the gold price, based on the deficit and the money supply, which is what we look at to value the price of gold, should be in the $3,200 to $3,500 range. That's where it probably is.
What's it at today?
Around $2,500.
Wow. All right, so you're talking about almost a 20% increase just because of some stuff. Now, it's like one of the things I looked is that I understand one of the biggest, in hearing what you're saying, one of the biggest drivers of the gold price is what the central banks ends up doing. But what does it mean now that the central bank is buying up tons and tons of gold? I mean, a lot of gold.
Well, there's always reasons that they do that. So they can hold US currency, they can hold other people's currency, or they can hold something physical like gold. I mean, they don't really get into the, purchasing stocks and things like that. So they're either going to hold currencies in the form of treasury bills, or they're going to hold, physical metals, mostly gold. So if you look at the US dollar, which would you have rather held since the year 2020, I'm sorry. We've lost 24% of the purchasing power of the dollar since 2020, and the price of gold has basically offset all of that. So these central banks say, look, what do I want to hold? Do I want to sit here and hold paper that's lost 24% of its value, and I hold billions of dollars worth of that, if not trillions of dollars? Or I can hold precious metals, which has a much better shot of holding its value. And then if the U.S. loses its world reserve currency status, I can move that gold over to some other currency. But again, the other point I'd like to make is they're not day traders. These central banks, when they purchase gold, they hold it for 10, 15, 20 years at a time. So if you want to understand where the price of gold is going, understand who the most powerful bankers are, which is central banks. They have the most money. They can print money out of thin air. I wish I could go in my garage and print money and then go buy gold. That's what central banks can do. So what are they doing? That's exactly what they are doing. They're either liquidating US dollars and buying gold, or they're printing money and buying gold. Either way, they want the physical stuff as opposed to the paper stuff.
Wow. Now, a lot of people who watch my show are average Joes. And I want them to understand what may happen if Kamala Harris is elected. But, how can they protect themselves, and how can the average person invest in gold?
Well, I think if Kamala Harris is elected, you are going to get another round of inflation for sure. Everything she says is inflationary. Let's print out money. Let's print up the money for the subsidies. Everything's just print money. It's a blank check. We're just going to go out. I mean, the craziest one I think she really came up with, and this is the absolute nuttiest one, is we're gonna give free money away to startup businesses. Look, there's an entire industry called private equity that does that. And the reason you need smart people doing it is because 9 out of 10 new businesses fail. Yeah. Okay, everybody can Google it. It's 9 out of 10 businesses. If I went to Vegas and I had a 90% chance of losing my money, Vegas wouldn't survive. At least I have a 49 or 48% chance of winning something. And so everybody's going, if you have a 90% chance of losing, you're not going to do it. No. But that's the dumb idea she comes up with. These people that already have a platform to get money, but the U.S. government's going to be better at it. They're not. So if she wants to print money and not control the deficit and talk about the deficit and talk about the money printing, if she's not going to talk about that, then it's going to continue. We are printing up, Barry, $2.7 billion a day just to fund the interest on the debt. If she's not going to fix that, then Elon Musk is right. The U.S. is going to go bankrupt.
But how can she fix it? If you're talking about giving out $50,000, I don't even think she was talking loans. I think she's talking just giving away $50,000 to people. Yeah. So she doesn't even expect to be paid back. They're going to try and push again this student loan with billions and billions, and they still want to. If she gets in, she's going to ship a whole lot of money over to those countries I can't speak of. So it's inevitable that the inflation is going to continue and probably actually get worse. And it just doesn't seem like she cares, or the people who are pulling her puppet strings don't seem to care, which is the weirdest thing, is because these people are wealthy, and you just have to wonder where they putting their money to make sure that, if she does there are a lot of rich Democrats, let's just call it, Hollywood, the sports, they're conservative when they're not on stage or something, because they've got to be finding a way to hedge their money as well. And you probably know a lot of them buying gold, do you think?
Oh, yeah, for sure. I mean, our business has skyrocketed in the last, month and a half. As soon as everybody thinks maybe Kamala has a shot, they're scared to death. I think even the Democrats are calling, behind the scenes. They might not admit it, but a lot of business going on. But you're right. Look, there's only a couple of ways to pay back the U.S. deficit or to shrink it. One is to pay it back. That's probably impossible. Default on it, they don't want to do that. Or you inflate it away. Well, based on what she's talking about, that's what she's looking to do. Let me just print a bunch of money and we'll pay it back with cheaper dollars in the future. Look, Elon Musk, he said he had a plan, and Warren Buffett said he had a plan. He could start paying down the deficit if somebody gave him 10 minutes to explain it. Look, you have one of the most successful investors on the planet, and he's saying, give me 10 minutes and I can tell you how to do this. But it doesn't get votes, Barry.
No.
If you don't spend money and give money to the people who need the money, then you're not going to get their vote. And that's exactly what she's doing.
Thomas Massey, I don't know if you've seen it, but you should look at it on Twitter/X. Thomas Massey put out a great video today, and he's talking about this continuing resolution. The government runs out of money again in, I think, the end of the month, and they're saying they're going to attach the SAVE Act to it, because in that regard, then the newcomers can't vote, and he's like, it's a shell game. We're going to play this game, but in the end, we're all going to cave. They're going to get what they want, and we're not going to get any further. If the government shuts down, if they do stick to their guns, number one, two questions. Do you advise, or would you think shutting the government down would be a good idea? And if it does shut down, then what happens?
Well, if they shut the government down and the politicians don't get paid until they get it going again, it's a great idea, because then they're in the problem, right? But if they get paid, they'll just sit there and try to figure out how to blame everybody else. They'll just be finger pointing all the time, right?
Yeah.
It's like the phone company, they just point fingers at everybody else. No, it's their fault, and they're the best at it out of anybody. Every time something happens, it's the Democrats' fault, it's the Republicans' fault, it's this, it's that. Everybody just needs to get behind the fact that we need to work on this deficit, or we're not going to have a country. Our kids are not going to be able to, they'll 50, 60% of their paycheck. Look, tax rates used to be 70% 30, 40 years ago. Mm-hmm. That's where they're going again if we can't resolve this issue.
I can't even imagine. So let me ask you a question. How can the election, how will this election, either way, affect the silver market?
80% of my portfolio, my personal portfolio, 80% right now is in silver, because the last time gold traded over $2,000 an ounce, the silver price was $49 an ounce, and it's trading at $25 an ounce now. On top of that, we are running in silver a 200 million ounce deficit. So with solar panels and batteries and all of the industrial applications for silver, we're running that deficit. The deficit's estimated to go up to around 220 or 230 million ounces. And a lot of it's being used for the green energy, an enormous amount in solar. And I don't think green energy is going anywhere. We got to, that's another thing we have to get under control, which is just this global warming situation. So solar is important. They're going to continue with it. And the silver deficit, I think, is going to get higher and higher. So over the next few years, silver should play a big catch up to the gold price, in my opinion.
So gold, you can get down to a tenth of an ounce. Right now, you're talking about a $250 investment, and silver, I think you said it's 40, not 40. It used to be 40. Now it's 25 or so.
Yeah, it's 25. The high in the market, the last time gold was this high, it was 49. So almost twice what it is trading at today.
All right. Well, then, so there's really no impediment for people getting involved in both gold and silver. It's not like you're going to have to break the bank, spend all your money. You can get in, get some stuff hedged, and you can continue buying as you feel comfortable, correct? Am I right with that?
Absolutely.
All right. So now I got a question for you. And I've had a few people ask me this. Can you purchase gold and silver basically funded through an IRA or some other retirement account?
Yes. Yeah. So we're authorized to do that. So we can put physical gold into an IRA, 401k, 403b plan, 403b plan. Just depends on where you are. If it's a 401k and you're still at the company, you can't do much with that. But if it's just a plain old IRA, we can move any portion that someone would like over to a physical gold IRA. Very easy. Takes 10 minutes.
And what you just said, physical. So just so all of you guys watching, you're not getting a certificate. You're actually getting the gold. You're actually getting the silver, even if it's down to a tenth of an ounce. What do you get? I think they sell stamps now or something. What do you get if you're getting a tenth of an ounce of gold?
Well, there's a tenth of an ounce American Eagle, so the coin will come in a tenth of an ounce, maple leaves, things like that. That's what I would recommend. They're highly liquid. And the other thing, Barry, that I want to have people understand is if the economy something dramatic happened, with a company we work with IRAs, you can actually take physical possession from your IRA. A lot of IRAs make you sell the precious metals, get the cash, and then you'd be back to buying physical metals. You can actually take physical delivery anytime you like. So I think that was a big benefit. One of the reasons we went with our custodian.
All right, so I got one more question, and even I would like to know this for myself. If things go absolutely haywire with this woman, if she were somehow to get into the office, how quickly and what can you do to actually liquidate your position in gold and or silver so you've got cash to do what you need to do, buy what you know, if you got to move or whatever? How quickly can you sell these metals?
Okay, so gold and silver are the most liquid investment on the planet. Not only could you go down to a bank or a brokerage house or call us and we will lock in the price before we receive it. We'll send you out a Federal Express label. You're going to go down to Federal Express, put it in the box like we tell you to, overnight it to us. It's fully insured, and we can overnight a check or wire the money back to you. But if you left this country and you went over to a different country, gold is the same price anywhere in the country. It's not like a piece of real estate where you buy it and then you got to go find, somebody to purchase it, and it takes a month or so to go sell. This is an absolute immediate transaction. If you walk into a brokerage house, you don't have to wait 3 days. It's physical and it's highly liquid.
That's pretty much. Let me see if I, Ashley, do anybody have some questions here? People says I'm trying to look at here. So pawn stores. So if you have gold, or you go into a pawn shop and buy gold, are you paying basically the same price? Are they giving you the same price based upon what the ounce that you have? So if you had an ounce of gold and went into your local pawn shop, what are they giving you for that?
It's a great question. Look, pawn shops have to make money. That isn't their business. Their business is to buy anything that comes through the store. So they're going to charge you something, and it's going to be something probably larger than we would charge. So just to give everybody an idea, if you purchase from Lear Capital, if you purchase from us, and then you sell back, we have no commission on the sell back. When you purchase, there's a fee. When you sell back, we don't charge a single dime. So if you go into a pawn shop, he's going to call us after he takes that metal and ask us what the price is, and then he makes his spread on it. So give us a phone call. We'll give you a better price than typically pawn shop. So if you got a guitar, go to a pawn shop. If you have gold, call us.
Well, Kevin, thanks for taking the time before the debate here. I know you want to watch it as well. These people are getting ready for it. Thank you very much. Guys, on the bottom of the screen there, you can see 800-601-5430 or go to learberry.com. If you call these guys, you can ask Kevin to put you in touch with some people who actually know and can deal with your personal situation and figure out what's best for you, whether it's an IRA, whether it's a tenth of an ounce, and get yourselves in a position to make sure you're protected. Kevin, thank you very, very much. Is there anything you want to add?
Yeah, you bet, Barry. Hey, well, yeah, I would say, hey, let's do something special for this debate, make everybody happy. If they call the number or go to the URL, we'll put $250 into their accounts to start. So if we'll pay for the shipping and insurance on their first order, or we'll pay their IRA fees with the money, but we'll put $250 in everybody's account. So, hey, look, let's go have a good debate, and we'll throw some money in there when everybody's account to get started on the right way.
Account for a second purchase as well? So if you already have an account,
if you don't have an account, then you can use it on the second account, and we roll over the money. So if you only use some portion of it for shipping, we leave it in the account. You can use it until it's gone.
All right. Somebody said here, can you explain what unrealized capital gains is? That's an easy one. It's gonna piss you off when he tells you this.
So let's say you purchased a stock today, and 2 years later, or you purchased stock 2 years ago, and today you're up 2 times the amount, but you did not liquidate the stock. Mm-hmm. You've got a gain in there. So you paid $100. It's worth $200 today. You have a $100 gain. What Kamala Harris wants to do is tax that $100 extra that you have not liquidated and made yet. The unrealized gain is the $100 that's still sitting in the stock that you would have to sell some portion to pay the tax on. So that's unrealized capital gains.
Yeah, and in your own situation, imagine owning a house that you've been in for 10 or 15 years. You bought that house for 80, and your position now, if you thought about selling, maybe you'd get $200,000 or $300,000. That's a big chunk of money there, equity that you're going to have to pay it with your taxes.
Oh yeah, I mean that's a great point. You know, I would say she probably stays away from actual people's homes, but anybody who owns an apartment building or anything else, I
Yeah.
mean, all of that appreciation that's happened in that apartment building is unrealized capital gains. So where's the cutoff? There is no cutoff because she's going to start up here with wealthy people, and she's going to move herself all the way down to us. It's a great way for the government, but what has to happen to get that tax? They have to sell the asset. So you get the real estate market crashing, the stock market crashing, because everybody has to sell to pay the taxes. You know, another completely stupid idea.
I got a quick question, or actually two before we go. First one is, do you appraise old coins? Because this person says they have some gold and silver, and they want to know, you know, do you guys appraise if you were going to purchase gold from them?
Yes, we appraise the coins and we do it free of charge.
Okay. And this is a real important question that only you can answer. Somebody asked, how solvent is Lear Capital?
Very. Yeah. I mean, we purchase back millions and millions of dollars every month when people liquidate. So we've been around for 27 years. We're extremely solvent.
Right.
And you have the gold. So the person who asked that question, just think about it. You have the gold. I ship the gold to you. You have it. It's in your possession. You can go sell it anywhere, if I'm in business or not.
All right, Kevin, we're about 15 minutes out. We're going to jump. Thank you for your time. You guys, again, go to learberry.com or give Kevin a call. Where's that number? Let me put it back up on the screen. 800-601-5430. Kevin, thank you very, very much for your time tonight. Go watch the debate.
Thanks for having me.
All right, bye-bye.
You bet.